I'm going to start working on my line by line addition. Okay. So Viagem group of companies, consolidated statement of profit or loss for the year ended 30th September 2012. So 30th September 2012. There you go. And in the exam, this is how it's going to look like. And I'm sure by now you had gone to the platform, seen the platform, started to work on the platform, answer questions on the platform, get access to the mock papers on the platform. I'm sure you've done all those, right? Now, approximately we have 1 week for the exams. So that would have been done. Now, when you read the question here, they say on 1st of January 2012, Viagem acquired 90% of the equity share capital of Greca in a share exchange in which Viagem issued 2 new shares for 3 shares in Greca. Additional 30th on 21st December 2012, Viagem will pay the shareholders of Greca 1.76 per share acquired. Viagem's cost of capital is 10%. The deferred consideration has not been recorded by we. You have to record it. As the date of acquisition, V's share price and G had a stock market value of 6.5 and 2.5 each respectively. And then you have the P&L. Okay, brilliant. Now that you've read that, you've understood it, you know our line by line addition is pending. We are going to work on the line by line addition. We have revenue. Don't forget, when I did this earlier, last class, I told you 1st of January, you're acquiring your year end is 30th September, meaning it's a 9-month acquisition. So we call it a mid-year acquisition. If it's a mid-year acquisition, revenues and expenses of the subsidiary has to be time apportioned. So equals 64,600 equals 64,600 plus open brackets 38,000 into 9/12. Okay. Now what you can do in the exam is this into 9/12 is there. When you're entering it the first time, you can copy it. Okay. Okay. 93,100. Then you have cost of sales. If you take cost of sales equals 51,200 plus open brackets 26,000. Whatever you copied, you can paste. Are we clear? 26,000, whatever you copied initially into 9/12, you can paste it. So that will give you 70,700. Gives you your gross profit. Now, this is just to save some time in the exam. Okay. Okay. And then you have your distribution cost. You have your admin expenses. In the exam, you can always copy paste from there. You can copy paste. That option is there for you. Distribution cost is equals 1,600 plus open brackets 1,800. Copy paste. Whatever you copied in the first line, I'm pasting it. Now see how I'm making use of my time. Even every 2 seconds that I spend, when I accumulate it, it's going to give me about 2 minutes, which is very important in the exam. So be smart in the exam, right? Equals 3,800 plus open brackets 2,400 plus whatever you copied. You're going to paste it. I'm getting it right. Okay. 2,400 into 9/12. Okay, 5,600. That is done. And then you have investment income. Your investment income, they say, is equal to 500. You take the 500. And then finance cost equals 420. And then you have your profit before tax. And then obviously you have your tax for the year. So taxes equals 2,800 plus open brackets 1,600 paste. Okay, why doesn't this paste? Into 9/12. 4,000. Are we clear? Are we clear so far, everyone? Yes or no? Are we clear? Are we clear? Okay. Now our copy paste is done. Now it's a matter of taking the adjustments and making the adjustments as required. Okay. Don't forget we have two requirements: goodwill on acquisition and consolidated P&L. Okay. Now we are here now. Working two. On 1st of January 2012, we acquired 90% of the equity share capital group structure done in a share exchange in which we issued two new shares for every 3 shares it acquired in Greca. So working to investment cost. Share exchange. You're going for a share exchange. Okay. What is the basis of the share exchange, my dear? You are going for two new shares for 3 shares it acquired. And YGM is giving shares, no? So whose share price is important for us? Relevant for us? 6.5, parent share price. Okay. Now, when parent is issuing shares, what is how many shares are they acquiring? 90%. How many shares does our subsidiary have? Our subsidiary has 10,000 shares. Okay. So equals 10,000 shares. You're acquiring 90%. Your ratio is going to be 2/3. For every share you are issuing at 6.5. Are we clear, everybody? Yes or no? Are we clear, everybody? Yes or no? Everybody, yes or no? 39,000. Okay, so that is that. And then they say, additionally, on 31st December 2012, Biogen will pay the shareholders of Greca 1.76 per share acquired. So then, number one, share exchange. Number two, what do you have? You have a deferred consideration. Two things. Deferred payment. When you take the deferred payment, they say they will pay 1.76 per share acquired. In total, our subsidiary has 10,000 shares. You are acquiring 90% into 1.76, 15,840. Therefore, 15,840 is your future value. Your future value is 15,840. Therefore, your present value will be present value equals future value O 1 plus R to the power n. You know the formula by now. Equals 15,840 over 1 plus cost of capital they have given us 10%. 1 plus 0.1. When are you paying? You're going to pay as at today, this year end, to the power 1. 14,400. Are we clear? Everyone, yes or no? Are we clear? Yes or no? Yes or no? Clear? Okay, super. Now, basically, therefore, relevant for goodwill. Total investments relevant for goodwill will be equals 14,400 plus 15,800. Sorry, 14,400 plus 39,000. That's my 53,400 relevant for my goodwill. Are we clear? Okay. Now, guys, you need to understand if you have a deferred payment, you're deferring your payment, a liability for that, there is cost of capital. On that, you have to pay unwinding discount. So, W3 finance cost. Finance cost. Now, what is your present value? Your present value is 14,400 from here. Your finance cost, they say, is 10%, correct? So, equals 14,400 into 10%, but into 9 over 12. 1,080. 1,080 is your finance cost. Are we clear? Are we clear? Yes or no, everybody? Okay, now you have to account for the finance cost. No, you already have 420 plus 1080 in the current year, 1500. Did you understand that adjustment, everyone? Did you understand that adjustment, everyone? Okay, brilliant. Understood. Okay. So that's done. So entirely, guys, remember, if you get a share exchange, you need to account for share exchange, but you need to take parent share value. Number two, if there is a deferred consideration can result in finance cost. So you have to account for the finance cost. So that is done. We go right to the bottom. The following information is relevant. At the date of acquisition, the fair values of Grey Cast assets were equal to their carrying amount, with the exception of two items. What are the two items? An item of plant. An item of plant had a fair value of 1.8 million above its carrying amount. Above its carrying amount. Okay, what does that mean? What is that? Working number 4. What is it? There is a revaluation gain. There is a revaluation gain. Okay, revaluation gain of how much? 1800. So revaluation is happening at acquisition, correct? So therefore, it's relevant for my goodwill calculation. I'll put a note. Remember, I have to calculate my goodwill also. No? So 1800 revaluation gain. Will that have an impact? Will that have any impact on my P&L? Yes or no? Will that have any impact on my consolidated P&L? Yes or no? Well done, Mervin. No impact in my consolidated P&L. Okay, super. So I'm going to go forward. And they say the remaining life of the plant at the date of acquisition was 3 years. Depreciation is charged to cost of sales. So working number 5, automatically we have depreciation to calculate. Okay. Okay, super. Now depreciation. How do you calculate? Equals 1800 divided by 3 years, which is 600. But out of this, into 9 over 12 is what is relevant for us now. 450 is relevant for us, correct? Because 9 months now gone, guys. So you have to always make sure that you account for 9 months. So it is charged to cost of sales. So I go to cost of sales, 7700 plus 450. Are we clear? Are we clear? Are we clear? Okay, super. Next, working number 6. Greca had a contingent liability. This is at acquisition, right? Greca had a contingent liability which YGM estimated to have a fair value of 450. Okay, contingent liability. Contingent liability of 450 at acquisition, meaning it becomes relevant to my goodwill calculation. Okay, you need to keep that in mind. Okay, let's go further. Greca has not incorporated these fair values into its financial statements. You have incorporated it. You have done it. Voyagem's policy is to value NCI interest at fair value at the date of acquisition. For this purpose, Greca's share price at that date can be deemed to be representative of the fair value of the shares held by the NCI interest. This is for NCI goodwill. So you don't have to bother anything about anything. So W7 NCI investments will be based on share price. So we can calculate that. No problem. Next, what do they say? Sales from YGM to Greca. So from parent to subsidiary throughout the year ended 30th September 2012 had been consistently 800,000 per month. So for how many months did you make the sale? So intra-group transaction, you are paying 800,000 every month. Am I right? So equals 800 into 9 months. Therefore, 7,200 eliminated from where? Sales and cost of sales purchases. Guys, in the exam, this 800 into 9 working is there, right? You don't have to show separately. 800 into 9, you don't have to show that, okay? If you just put it in the cell, your examiner will go and check that out. You don't have to worry about it. For example, here, you don't have to show the examiner how you got 93,100. Your examiner will understand that. Are we clear? Are you clear? He's supposed to go to the cell and check. Now I have to remove the intergroup transaction. How much? 7,200. Eliminated. Minus 7,200. Done and dusted. Let me go further. Guys, so far, am I clear? Am I clear, everyone? Am I clear? Okay. YGM made a markup on cost of 25% on the sales. Greca had 1.5 million of these goods in inventory as of 30th September 2012. Okay, so that means URP. Guys, we have looked into it so many times. We have looked into it. Okay, this is a testable area in the exam. So it is tested. So you got to make sure that you are ready for it. URP. Now, URP, what is happening, guys? You have 1,500 value of goods into 25% equals 1,500 into 25 over 125. Clear? Which is 300. Eliminated. Eliminated. Who is the seller? Seller is YGEM. So eliminated from V. You need to make sure that you put that also. YGEM's investment income is a dividend received from its investment in a 40% owned associate, which it has held for several years. Okay, now our group structure is going to change. Okay, YGEM does not only have 90% of Greca, it has 40% of some other company called associate A. 40% associate. So your group structure is changing. There you go. And then you can come back. And they say the underlying earnings for the associate for the year ended 30th September 2012 was 2 million. Okay, two things. You have a dividend received from a 40% investment. So the working number 10, you have intergroup dividends. Intergroup dividends, you will obviously go and eliminate it. Why? Because you're going to add the profit share of the associate. Because you're going to add the profit share of the associate, you're going to eliminate the dividends. If not, it will be double counting, guys. So eliminate how much? Investment income is 500, eliminate 500. So I go to the top. I go to the top. I come here. I come to investment income minus 500. It becomes 0. Okay, that's done. And then, guys, yes, we have eliminated the investment income, but there is what? There is 2 million that you are receiving, right? So that is your share of profits. So share of profits has to be added. So W11 associates share of profits. Okay, how much is the total share of profits? You are receiving 2,000 equals 2,000 into 40%. That's going to be how much? 800. So this is the associate share of profits you're receiving, right? So therefore, what you can do is you can come here, investment income is 0. So therefore, I can say associate share of profits, 800. Guys, however, I am taking the entire 800 only because they say it is there for several years. But if it is months acquired halfway, then I'll have to apportion that as well. Are we clear? I'll have to apportion that as well. Are we clear? Are we clear? Okay. Although Greca has been profitable since its acquisition by YGEM, the market for Greca's products has been hit badly. And YGEM has calculated that there is a goodwill impairment of 2 million. So working number 12, impairment of goodwill. Now, what do you have? Impairment of goodwill, you have to you have 2,000, but in this 2,000, 90% is parents. Out of this 2,000, 10% is NCI. So probably equals 2,000 into 90%, and then you have 200. Now in the exam, you don't have to show this. If you just put this itself, it's good enough to get your marks. Are we clear? Are we clear? Are we clear? Superb. Now that we are done, we can start getting the answers here. So obviously 85,900 minus 63,950 gives me 21,950. That's my gross profits. So my profit before tax will be equals 21,950 minus distribution cost minus, oops, 21,950 minus distribution cost minus 5,600 plus associate share of profits minus finance cost gives me how much? 12,700. From 12,700, I deduct 4,000. 8,700 will be my profit after tax. Hopefully, I got it right. Did I get everything right? Did I make any mistakes? 21. So URP. Okay. URP has not been adjusted. Did I adjust URP? Oh. There you go. 300 URP has not been adjusted. So plus 21,650 and then to 950, 5,600 and 800. And then 1,500. 12,400 minus 4,000. 8,400. Okay. All good. All good. All good. Did I get my calculations correct? Did I get my calculations correct? So impairment of goodwill. There you go. Yeah. We have impairment of goodwill, right? So basically there is impairment of 1,800 can be allocated, can be added here. Now clear? 6,600. There you go. That's done. Impairment. Adjusted. Adjusted. So now we have our profit after, so these are group profits. Contingent liability, what to do? Contingent liability is accounted in the goodwill, right? We have to take it to goodwill, right? And a liability as an acquisition. So that will be adjusted there. So group profits 6,600 done. Now I have to calculate NCI share of profits. There you go. So next would be NCI share of profits, and let's start working on NCI share of profits. So if you are done with NCI share of profits, obviously we have to do the goodwill calculation. With that, we are done. So basically, NCI share of profits, I need subsidiaries profits, right? Subsidiaries profits. So how much is subsidiaries profits? How much is subsidiaries profits, everyone? How much is subsidiaries profits? Calculate. How much? Give me subsidiaries profits quick. Subsidiaries profit is given as NCI share of net assets. I need subsidiaries profits. 6,200. But then again, it's not actually 6,200. 6,200 into 9/12. Because I have it only for 9 months, right? So 6,200 into 9/12. Are we clear? Because the remaining 200 is a part of NCI. Neha, the remaining 200 is for NCI. Probably Kaplan would have taken the entire 2000. Please don't take it. The remaining 200, take it to NCI. Because it's the total goodwill, right? The goodwill has been impaired. So entire it's been impaired. So the remaining 200 will be taken to NCI. So I'll show you how to do it. Don't worry. Okay. I remember Kaplan has taken the entire 2000, but let's apportion. Now here subsidiaries profit 4650 and all other adjustments should be considered. What are the adjustments? If you come here, you have depreciation of 450. You can come to the top. Depreciation minus 450. You have impairment of 200. Post acquisition, all adjustments, impairment 200 relevant. That is relevant for subsidiary only. Okay. URP, will it be relevant? URP, will it be relevant? No, because the parent is selling. Brilliant. So that's it. So equals sum 4000. Correct. No, 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 no. No, because hold on. 4650, right? 4650 in that the share relevant to NCI is only 10%, right? There you go. 465. From that, depreciation equals 450 into 10%, right? Relevant. 45. So either I can take it like that, or what I can do is there is another way to take it. Okay, it's a simple way. I can take 4650 and I can take 450 equals this minus this 4200. In that NCI share is 10%. It's going to give the same answer equals this into 10%. Gives me 420. From this, I can deduct impairment. Remember, was 200. Therefore, 220 is your NCI share of net assets. Neha, I've taken the impairment here. You understand? Out of the 2000, 1800 on top, 200 here. This is my NCI share of. Neha, understood? Please take it like this because only then we can apportion it. Okay. Now that we are done with that, we can also look at goodwill on acquisition. That's our another requirement. Guys online, did you understand? Guys online, all of you, did you understand? Okay, for goodwill, I need my investment cost. Investment cost of parent and NCI, correct? Parent's investment cost, we calculated on top, right? Remember, 53,400, we calculated already. NCI investment, we are supposed to use the share value, correct? Subsidiary has 10,000 shares, 10%, and the share value that we are going to use for this calculation is going to be 2.5 because subsidiary share will be relevant to calculate subsidiaries NCI. So into 2.5. Guys, all this we have studied in our previous lessons also. Correct? That's done. From this acquired net assets, what do we require? Share capital, we know already it's 10,000. Are we clear? And then we require retained earnings at acquisition. Okay, retained earnings at acquisition. How much is it, everyone? Retained earnings at acquisition, how much is it? Anyone? Anyone? Retained earnings at acquisition, anyone? Let's see who's getting it right. Retained earnings, guys, retained earnings, how much is it? Neha says 35,000. Any other answers? Any other answers? Anybody? Guys, it's a bit disappointing. You're unable to give me answers. It's a bit disappointing. You're struggling at this point. You can't struggle. You can't struggle. Retained earnings at acquisition. Goodwill is at acquisition. Retained earnings at acquisition. Okay, now what you're giving here is 35,000 on 1st of October 2011. This is on 1st of October 2011. You're acquiring on 1st of January. You're acquiring on 1st of January, my dear. You're not giving me the correct answers. I'm so sorry. Until 1st of October 2011, yes, it's 10,000. But I want acquisition. Wasn't has given me a figure. Let's say. Okay, now guys, this is where most of you are getting yourself confused. Now look here. Now if you try to put up a little timeline, right? Okay. Now your year end is 30th September 2011. Your year end is here. 30th September 2000 2012. You have started from 1st of October 2011, but you're acquiring on 1st of January over here. 1st of January 2012. So I want retained earnings at this point. Here they are given us retained earnings on 1st of October 2011. So 1st of October 2011, it is 35,000. I understand that. As of today, what is the retained earnings? Now, you can't mess up there. One last time, I'll explain you. Look here. One last time, I'm going to explain you. Guys, this is very, 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 very important. During this period, you have made a profit. Subsidiary has made a profit of 6,200. 6,200 is for how many months? 12 months. So if you're moving from here, 35,000, October, November, December, for 3 months, you need profits, correct? 6,200 into 3 over 12. That will give you your retained earnings at acquisition. Guys, please, please, please don't play with that. Please take that serious. I've already done about 3 to 4 questions there, right? 35,000 and then profit adjustments 3 over 12 equals 6,200 into 3 over 12, 1,550. If it is loss, you will deduct. If it is profit, you will add. There you go, 36,550. And you will adjust everything at acquisition. Everything at acquisition. What is there at acquisition? At acquisition, there is revaluation 1,800. At acquisition, there is, you see, at 450. So 450, we have a contingent liability. Minus 450, you will adjust. And then what will you adjust? Revaluation. There was a gain. How much is the gain? Gain is 1,800. You will adjust that. So equals 1,800. Therefore, in total, 47,900. In that, you're acquiring 90%. So equals this into 90% is 43,110. 53,400 minus 43,110. That's your goodwill on acquisition. And then you have NCI. When you're taking NCI 2,500, but here what is happening is equals 47,900, but 10%. So equals this into 10% is 4,790. So you have 2,500 minus 4,790. You have 2,290 negative. Are we clear? Yes or no? Are we clear? Are we clear? It's a negative goodwill. Now, guys, don't forget, your total goodwill is this, but from this, there is impairment of minus 2,000. Therefore, your goodwill to show in the balance sheet would be 6,000. Guys, we've done questions like this. Before, and I don't know why you're getting confused. It's a straightforward question. Do you understand? Yes or no? Everybody, do you understand? Yes or no? Are we clear? Are we clear? Okay. Superb. I just wanted to meet you with this. Now, I've got some doubts to clarify. I've got some messages from students. I'm going to clear off the doubts by today, tomorrow. If you want again, I can meet you on Thursday to do the pyramid question. You wanted me to do a pyramid question. I can meet you on Thursday and entirely we can finish off the session on Thursday. Okay, Akash, that's what. Pyramid question, right? Premier question. Okay. Can you drop me a message again? Because guys, I keep missing messages. I get a lot of doubts, right? So sometimes I keep missing pyramid question. I'll do it. But Premier, if you have the doubt, just drop me a message, another message. I am actually trying to sit tonight or by tomorrow to clarify all the doubts. So by tomorrow, I should be able to send it. If I have not sent it, just drop me another message. So guys, we'll try to meet again on Thursday for a last question. It can be a cash flow or pyramid, whatever question that you send me in the group, I'll do it for you. And now, right now, it's about examiners reports, going through technical articles, doing past paper questions. And there is a video which our one of our world prize winners had recorded. We'll be sharing it with you so you can get some motivation through that. Thank you so much, guys. With that, we will catch up very soon on Thursday. Okay? Take care. Akash, can you call me tonight?